This past week, I traded NQ futures for about an hour a day and ended up making $20,000. But here's the crazy part. It wasn't from trading some new shiny setup. It was from following my old simple strategy step by step over and over again. In today's video, I want to actually break down the trades that I took over this past week so you guys can see exactly what I did, all the wins, all the losses as well. We got to be transparent here so you guys can see how the strategy can be applied towards your own trading if you want to add it to your own playbook. So we'll go back trade by trade. I'll walk through the examples of some of the trades that I took and apply the strategy with it. And you guys can see how it played out, break down the numbers. And by next week or even tomorrow, you guys can literally apply the strategy and see how it plays out for you and if it's a good fit for your style. Let's get straight into it. All right. So starting off, this is Friday's trade, which was actually our biggest day I've ever had. All right. I actually wasn't supposed to make this much. I'm just going to be 100% clear. My trade copier ended up continuing and holding the trade. For some reason, it exited out very heavy in profit. I was supposed to be up around $3.5 to $4,000 per account, but it ended up leaving me about $5K per account, which I'll take it. Look, I'll take it. I'll take the extra profit. But we had a really nice trend, and we ended up banking really good on 2 trades. So this strategy, I trade pretty much the first hour of market open of New York session. So from 9:30 a.m. Eastern time till about 10:30 a.m. And you can see the time on the bottom is corresponding to the Eastern time. All right. 9:30 a.m. market opens is when I'm looking for a trade. All I like to look for is my bias. What direction are we trending in? So we had a bearish trend going to market open and we had a bearish bias. How did I get to that? We had a downtrend forming of lower highs and lower lows. This is my main criteria for identifying my trend. What is the overall market of the thing we're actually trading? And is price above or below the 200 EMA, which is this light blue line right here? All right. If price is below the 200 EMA, my general bias is going to be bearish. And if we have, along with that, trend in the direction of our bias to the downside with our bearish bias, that's going to give me an even more stronger confirmation for a bearish bias. After that, I'm waiting for a simple pullback to my green and red moving averages, which is just the Williams alligator. I can actually pull that up for you guys. Whoops, not that. That's my session indicator. The Williams alligator, these are my settings for it, so you guys can check that out and save it, screenshot it, whatever you need to do. This is what I have enabled. I disabled the blue line because I don't really need it. I mainly look at the lips and the teeth length and their corresponding offset values. All it is a set of moving averages that are shifted to the right by a few candles. For some reason, it works. I don't know why and who thought that would be a good idea. Seems like it works, so I'm going to keep using it. I'm not going to, if it ain't broke, don't fix it. Come on. We ended up getting a pullback here after we had a strong bearish bias, right? Price below the 200 EMA. We're downtrending. We got a pullback, and my actual entry criteria is once we pull back between the green and red moving averages by either closing in there or wicking in there, I'm waiting for a bearish candle closing out of the moving average zone between the green and red. We got that precisely on this candle. So you best believe I'm getting in with my stop loss at the furthest point of the pullback, which happens to be at the top of this black candle. You guys can see right there. I'm just going to undo that so it goes back. And my take profit is going to be placed always, always, always at the swing low. There's one exception to this though. My RR, if my RR ends up being a negative RR, less than 1, I'm going to make it simply put just a regular 1-to-1 RR. So I always want to have a minimum of a 1-to-1 RR when trading the strategy. So that just helps me be consistent. I don't really want to take too many negative RRs and have random RRs all over the place. So I'm going to stick to trading it like this. So we got the setup off this candle close, entered, stop loss at the high of this pullback, take profit at the swing low, and simply banked on it within 2 candles. That was beautiful first trade on Friday. We ended up continuing down with a strong downtrend, which is really effective for our trading strategy because I've noticed when we do have a strong trend, we happen to get really good trades that hit most of the time because we're kind of riding that momentum of the strength of the trend. Once we get a pullback to our zone and then get a candle close out with like still having strong strength in the market in the original direction of the trend, we can see some nice continuation, right? And my rule of thumb is 2 trades a day, just so I don't have too many random spikes in my performance to the upside and to the downside, just kind of keeping it clean, not too heavy profits, not too heavy losses in drawdown. And that allows me to like not have a lot of variance in my actual portfolio. All right. So this second trade that we actually had, we came between the green and red moving averages. We got a retracement, right? After a strong downtrend, we waited for price to come close out with a bearish candle after tapping between the green and red moving averages, and we got that exactly on this candle. So we're going to enter right when this candle closes. We're going to put our stop loss at the furthest point of the pullback, and we're going to put our take profit at the swing low. And look at that, bro. Beautiful. We smashed TP after a few candles of hesitation. We smashed TP. Beautiful wrap up for the day. Ended up, again, really heavy in profit. Biggest day. And I trade with funded accounts. If you guys don't know, I don't trade with personal accounts. So it's not like I made 20K straight to my pocket. Okay. Prop firms, mine specifically has a 90-10 split where I keep 90, they keep 10%, and also I have to follow a payout structure so I can get the payout. Some other prop firms are 50-50, some other are 80-20, and everything in between as well. So that was the wrap up to the Friday. We finished our trading day within 30 minutes into market open, 26 minutes into market open, wrapped it up about around 10 a.m., called it a day, went off my weekend, did whatever the hell I wanted to do. Now comes the day before. We actually had a loss today. So yes, I do take losers. I don't win every single trade, and I'm going to show you guys the losses because that's very important. Okay. On this day, we actually had a bullish bias. All right. Coming into market open, we got some nice push up, some strong trend continuing this uptrend that we started from pre-market, right? You guys see that higher highs and higher lows. Not that strong, but we picked up a lot into market open. We got a retracement after that, which is what we look for. And since we have a bullish bias, we're only looking to take bullish trades. So what do we see here? We got a pullback between our green and red moving averages. Once we tapped in here with this black candle, we're waiting for a green candle to close out for us to enter. We only want to enter on candles closing out that correspond to our bias. All right, meaning we want a green candle for a bullish trade or a bullish candle for a bullish trade to be our entry candle, or a bearish candle for a bearish trade to be our entry candle. So bullish bias, we want a bullish candle, which is exactly what we got here off this green candle. Entry at the candle close, stop loss at the furthest point of the pullback, which is down here, and our take profit at the swing high all the way up here, the moment we stopped right before we retraced. And this thing ended up barely pushing in profit and then retracing and hitting our stop loss while going back in profit again. Right? I can't be mad. I can't be upset. I can't get emotional and think, oh my God, my stop loss just got liquidated. It's about to go hit my take profit. That mindset is going to make you lose in the long run. You want to just focus on executing your rules and allowing the long term of trades keep you profitable, not the short term. It's easy to get whipsawed in the short term and see the wins and losses and think my strategy's passed or my strategy doesn't work anymore. It was just working last week. What happened? But the reality is in trading, you're going to have losing weeks. You're going to have some weeks that are really green, some weeks that are possibly really red, consistently back to back. And sometimes you're going to have break-even weeks or weeks that you don't get a single trade. And you have to be 100% okay with that. Because being profitable is all about zooming out, looking at the long term and seeing what is my performance over the month, over the quarter, sometimes even over the year. That's really what keeps you profitable, because the best traders have red weeks and red months. What makes you think you're not going to have red weeks and red months? Somehow you're better than the best trader. I'm not even close to the best trader in the world, but I still take losses, as you can see today. And one rule I actually have in this strategy is I move my stops to break even after we go 1-to-1 RR and profit, which we did slightly over here. Or actually, no, we didn't slightly over here. We got really close, but we didn't actually get there with this dotted line. So once that would get hit, once we cross that line, just simply move this to break even, and I'd let my trade be a risk-free trade, either to my take profit or back to my break-even stop loss. But we ended up getting a loss of $5,000 on this day. Totally okay with it, totally happy with it. As long as we followed our rules and took trades according to our strategy, that's all that I can control, and that's all that I can be proud about. All right, we didn't get a single trade after that, because you can see, even though we got stopped out, we did push up over here and retrace and come get another candle close out right here. But the issue with this trade is that once we come and tap the red moving average down here, like we did on this candle that stopped us out, we wicked the red moving average. And as soon as we touch the red moving average, I'm saying hands are off. Our pullback is too strong. I'm waiting for a price to come, push back up, break the swing high, for me to want to look for some more pullback plays, because once we tap the red one, that tells me our pullback is too strong, and I don't want to take any continuation plays until price proves to me that we want to push back up and have the strength to the upside by coming up here and breaking past the swing high. If we did that, like what this white line is showing, then I would have taken another pullback continuation play. But in this situation, we haven't gotten that. We pushed up a little bit, came back down, we got another entry, and as you can see, got stopped out. Avoided a loss with this rule. So all the rules I have in this strategy are meant to protect me and minimize my losses while maximizing my winners. So that's why I have all the rules set in place. Okay. Now that covers Thursday. Moving on to Wednesday's actual trade. I think Wednesday, yeah, we had a small green where we had one win and one loss. So today we had two trades, or this day we had two trades, one loss and a win. The first trade we had going into market open, we had a bearish bias, not too strong. I know it's a little bit cluttered, and this trade was very fast. By the way, if you guys haven't realized, I trade on the 30-second time frame. So I'm getting in and out of trades within sometimes seconds up to like an average of few minutes. All right. So in this situation, market opened. And actually, guys, on the left side, I know you see other time frames. I don't necessarily focus on these two time frames. The 5-minute over here, I used to implement it, but it's not as significant anymore. It's just for me to glance at to see the bigger picture real quick. And the top left is the 1-minute time frame, where I want to see price also hover above the moving average if it is doing that on the 30-second time frame. So whatever is happening on the 30-second time frame in terms of where price is in correlation to the blue line, I want to see that also, that correlation on the 1-minute time frame up here on the left. So if price is above it, above the moving average on the 30-second, I also want to see price above the moving average on the 1-minute. Okay, but in all these situations, it was, and I'll show you guys. Let me pull up Thursday so you guys can actually see that it was, because this is also a key significant part of the strategy, because sometimes we can have a lot of chop towards the moving average, and that can allow us to have very conflicting biases. So we don't want to trade when we have a conflicting bias. That's why we have this 1-minute rule to give us some more confidence on our trades. On this specific setup, we had a downtrend coming into market open. You guys can see the lower highs and lower lows made. Perfect. On the 1-minute, we're also below the 200 EMA. Same with the 30-second time frame. All we're waiting for now is a retracement coming back to the moving averages. So market opens, we retrace, but we tap the red moving average all the way up here, so it invalidates. What do we do after it taps? I know it's a little bit cluttered, but we want to wait for a price to come back down and break the swing low, which it does with that next candle down here. Once it breaks it, we're ready for another pullback opportunity, which we get precisely on this move back and this candle closing down for our bearish trade. We enter on this bearish trade, bearish candle, take profit at the swing low, stop loss at the furthest point of this specific pullback, and what do you know, absolutely no profit and go straight to drawdown. 100% okay with this loss as well. Why? Because it's a valid loss. In trading, there's valid losses and invalid losses. There's good and bad losses. A good loss is one that you take following your rules, exactly following your rules, and a bad loss is one that you take breaking your rules. And the reason we only want to take good losses is because those are the ones that we are sure that are part of our strategy, part of our profitable strategy, okay? Meaning that even though we take these losses, we're still going to be profitable in the long run because our strategy's probabilities say so. If we have a 60% win rate, for example, with a 1-to-1 RR, that means we're going to be losing 40% of the time with our 1-to-1 RR strategy. So just because we take a loss doesn't mean the strategy is broken. It just means we're on a losing period of the strategy. This is why I always say you have to think in terms of probabilities, so you really understand how trading works and what profitability really means, okay? Because 40% losing rate, because you have a 60% win rate, means that out of 100 trades on average, you're going to be losing about 40 of them. And you can't predict on the lower time frame whether it's going to be win-loss, win-loss, or win-win-win, loss-loss-loss. It might be loss-loss-loss, win, loss-loss, win-win-win. So you don't really know the sequence, but it might seem like it's unprofitable in the beginning, but later down the line, it might kind of pick back up and come back to the probabilities and pick up from that losing streak and make up the losses. So you have to always look long-term. I'm going to preach that all the time because a lot of people suffer from just focusing too much on the short term. Now that first shit was a loss, immediate stop loss. And we were waiting for price to come back and push past this swing low, because you guys can see we retraced, pushed back up, breaking above the red moving averages and having a lot of clutter over here. And then we pushed back down all the way down here. At this point, again, we're waiting for a retracement into the green and red moving averages, which we get right here. And then we get our black candle close out, our bearish candle close out for our entry, stop loss at the pullback, take profit at the low, or a minimum of 1-to-1 RR. Remember, we want a minimum of 1-to-1 RR for our strategy, which is exactly what we have here. 1-to-1 risk to reward ratio. If we put our target over here, we'd have a 0.78 risk to reward ratio. And I told you guys, I don't want to have less than a 1-to-1 RR. Now, that's not to say there's anything wrong with a negative RR. You can totally be profitable with a negative RR. I just made this rule of thumb because I didn't want to break any rules with the prop firm if I have a negative RR that's like 0.1, because some prop firms don't allow you to have a extreme negative RR. Let's say this swing low was all the way over here. That would cause me to have an extremely negative RR, and sometimes that might be that might cause me to break rules for certain prop firms if I'm targeting a really small target and a big stop loss. So I just kept it simple with a minimum 1-to-1 RR just to keep things easy for me. But you guys can definitely go on backtest trading with like targeting the swing low without incorporating the minimum 1-to-1 RR rule and see if that's even more profitable. It could be. I'm not trying it out because this still works for me, but that can also definitely work as well if you want to test that out. So that's up to you guys. But I like to use minimum 1-to-1 RR. And you guys can see this trade literally bottom ticked this shit. Absolute bottom tick. Smacked our TP within 2 candles within 1 minute and then reversed on us and went back, did whatever it wanted to do. I'm out of my trade. I don't care where the market goes after my trade. As long as I'm entering my trade properly and setting my stop loss and take profit where it's supposed to go, that's all that matters to me. I don't care how the trade goes to my take profit. I don't care what it does. It can chop for 15 minutes and then go to my take profit or my stop loss. I wouldn't care. If I see that it's a consistent pattern, the price decides to chop and then hit my stop loss or take profit, or if price decides to chop and then hit my stop loss, then I'll add a rule to prevent or exit my trade early if it chops, because it tends to hit my stop loss whenever it does. But if I don't see that as a pattern, I'm not going to add that as a rule. A lot of you guys make the tendency to jump and add a rule just because you see other people do it on social media with their strategies. But the reality is every strategy is different. Some strategies work better with a certain rule and some strategies work worse with a certain rule. For example, one strategy might work really bad with a break-even rule, and some might do really good with it. It's all about testing and trial and error, which is all we're about over here. All right. Now, this is Tuesday, the second day of the week, and we actually had a losing day with 1 loss and 1 win again, but our loss was bigger than our win, causing us to be in the red. All right. And majority of these trades I enter with 3 minis. Just keep in mind, that's why it's like a small trade, but I make a lot of bread or lose a lot of bread because I enter with 3 minis on average. All right. So this trade, we had a move up, right? We had our uptrend. We broke the red moving average down here going into market open, right? We had this move down and then move up. We broke past the swing high right here. So now we're waiting for a retracement back down to the green and red moving averages and then a candle close out. And we got that on this tiny little green candle. I don't care how big the candle is, but we got it on this candle. So this is my entry point. My stops are at the lowest point of the pullback. My TP is at the swing high, and my RR break even is at 1-to-1 about right here. But you guys can see this shit went immediate stop loss. Literally a massive BBC down to our stop loss. All right. Again, 100% valid loss. I'm totally okay with it. And then we also had a second dub after we started uptrending. And we finally got a tap right here. Banged on that trade right here. Smash TP, barely top tick that stuff, and really small trade, but you know, it's a valid trade. It follows my rule within the first hour. We took this actually at 10:29, a minute before our trading window ended. So it's completely valid. All right. Down here, we were close to getting a setup over here. I think if you guys are on MNQ, you probably caught this trade as well. Some of the Discord members did. By the way, we trade live every single morning with this strategy. Live trading, sharing my screen, giving my analysis, just like how I'm doing to you guys now, but live during the day with my private community. If you guys want to join that, the link is in the description for that. You can definitely check that out if you want to be part of the community to watch us trade live and actually apply the strategy live. All right. But we were about to get a setup here on this area, but people on MNQ, it actually tapped the moving average because of the slight price discrepancy on my MNQ. But since I'm on NQ, we didn't get a setup. But Happy those guys also banked on that as well. So we caught our W later in the day, but we still ended up red. And it is what it is. All right. After 10:30 a.m., after my 2 trades, I don't care what P&L I'm at. I'm done for the day, and I'm going to go recap and look back on my trades and reflect. What was my thought process? What did I see for the day? What are these lines? What did I see for the day? And what was I following? Was I following my rules? Was I breaking my rules? Did I get emotional? Did I take trades I wasn't supposed to? Right? All these important questions to help you break down why you're unprofitable or why you are profitable so you can stay profitable. All right. I'm profitable because I follow my rules and my rules work and are tested to show me profitability in the past. That's what keeps me profitable. And back to the last, or I should say first day of the week, Monday, we start off with a green day, but in this situation, we also had 1 win and 1 loss. So a lot of the times, like last week, we saw 1 win and 1 loss, but we got a green candle over here, closed out of the moving averages, the green and red moving averages, clear bullish buy, so you guys can see this uptrend. Candle closed out on this after tapping between the green and red. Enter off that. Stops go to break even after 1-to-1 RR, but we got really close and didn't tap that. And we ended up getting actually stopped out on this next candle right here that gave us our entry. All right. So this candle actually stopped us out and gave us an entry because you can see it closed out and it didn't touch the red. It got really close, but it didn't touch it. So that gave us our entry for our second trade, take profit at the same place, and our stops go to break even after 1-to-1 RR. So this thing ended up giving us our entry and smashing through take profit on that third candle right here. And we didn't even have a chance to move our stops to break even because this thing flew to take profit. And that set us back in the green for about a $600 day approximately. I'll take it. This week was a green week. That kind of wraps up the entire week's. Okay, what are these lines? That wraps up the entire week's kind of performance. So you guys can see we also had, I can give us a sneak peek of last week as well. Right here, wrapped up Friday green, about $2,500 day. The day before that, we had Thursday. That was about what, $7-something thousand day. Okay, this day before that, all right, I think I reached the end of the price action, but this day was another massive green day. So like the win rate has been pretty good so far. But I'm just gonna be real with y'all. The real win rate I've seen with the strategy is about 55-60%. 55-60% is like the approximate win rate with this strategy. So sometimes you're going to see a lot of green. Sometimes you'll see a little bit of red consistently. The longest losing streak I've seen is about a 9 or 10 trade losing streak. And the longest win streak I've seen is about 14, I think. 14 long win streak. And my average RR is about like 1 to 1.5, 1 to 1.7 around there. So you can do the math on that. Just the fact that my win rate's above 50% and my average RR is above 1-to-1, that sets me in the green because I get more winners than losers, and I win a little more on my winners versus how much I lose on my losers on average. So that's my profitable strategy. If you guys want a full breakdown of how the strategy actually works and see the in-depth rules on it so you guys can copy that, save it to your notes, whatever you need so you guys can look back on it, check out the video that's popping up on your screen. I think it's going to be over here. That's going to show you guys the exact set of rules that I use and I trade with every single day. So W week. I'll catch you guys in the Discord or the next video. Have a blessed day. I'll catch y'all later.